Greetings to our respected doctor and my wonderful classmates. My name is DESHALENI ERAKULAN, matrix number 289268. I am here today to brief on our group's title. So, the economic development in Malaysia is strongly influenced by the global economic environment. Since it's an economy that practices international trade with dependence on the external factor to develop the country. Today, we are going to focus more on the issue of BOP and about the current account situation in Malaysia. Current account balance is the sum of net exports and imports of products and services, net primary earnings and net secondary earnings to or from the rest of the world. Primary earnings is the net go with the drift of profits, interest and dividends from investments from different international locations and net remittance flow from the migrant workers. While secondary earnings refers to the transfers recorded within the balance of bills every time an economy presents or gets goods, services, earnings or financial gadgets without a corresponding return of an object of monetary cost. Well, this study investigates the study of the current account balance trends in Malaysia from 2014 to 2019. Besides that, it also compares the exports and imports balance of goods account in the current account balance in Malaysia from the year 2014 to 2019.
Assalamualaikum and good day, sir. My name is Nurul Syifaa binti AHMAD KAMAL and my matrix number is 286158. I will present 4.0, which is discussion and analytical review. Table 1 displays the current account value from 2014 to 2019. Based on the slide, I have shown the trend by using arrow sign of either going up or down in value during the period under review and making a calculation of the percentage change of the current account. Overall, current account flows experience ups, downs, and rebounds in value during the period under review from 2014 to 2019. However, they remain positive in value and a current account surplus occurred. I will explain the reason why the trend experiences ups and downs on the next slide. The current account trend in 2013 was 35,485 million ringgit, increasing to 48,554 million ringgit in 2014. The increase in the current account was 13,069 million ringgit or 36.83%. This increase is the largest amount over the following year. The current account surplus was driven by continued expansion in domestic and global economic activity, as well as resilient regional demand and a strong recovery in semiconductor sales. In 2015, the current account trend from 2014 to 2015 showed a decrease from 48,554 million ringgit to 35,155 million ringgit, a decrease of 26.60%. This decline is also a large amount compared to the decline in the following year. The smaller current account surplus was supported by a reduction in the deficit in the primary income account despite a smaller surplus of goods and services. Due to weak external demand, commodity prices became lower and the ringgit depreciated. The good and service account surplus declined significantly in line with the disproportionate growth of major trading partners, the strengthening US dollar, lower commodity prices, and a larger deficit in the account service. The current account surplus also declined due to a larger deficit in the services account. This was due to the reduction in the travel account surplus. As a result, the number of tourist arrivals will continue to be affected due to aviation incidents, natural disasters, and security concerns, although there are benefits from the depreciation of the ringgit. Thus, to ensure that the strengthening of the ringgit and the current account continue to record a surplus, the government has acted by urging local companies to review their investment plans and buy assets overseas as well as reinvest in domestic income. After that, in 2016, current account flows experienced a smaller decrease or surplus of 29,907 million ringgit compared to the previous year of 35,155 million ringgit. According to the Economy Report 2016, the performance was due to the narrowing of the surplus of the good account as well as the services and income account, which continued to record a deficit. The good account surplus decreased mainly due to commodity export earnings, the smaller one. The goods account surplus narrowed because of weak global trade and persistently low oil price. Meanwhile, the service account recorded a smaller deficit due to higher net payments for transport, insurance, construction, and professionals. The services account recorded a deficit due to higher charges for freight and other services. However, the travel account surplus increased supported by higher travel receipts. During the same period, the primary income account recorded a larger deficit due to a reduction in investment income accrued to foreign companies in Malaysia, while the secondary income account recorded a lower deficit due to remittances by foreign workers.
Next, in 2017, the current account trend showed an increase of 28.05% from RM29,907 million in 2016 to RM38,296 million. The current account increased due to Malaysian economy more robust growth during the first 6 months, supported by strong domestic demand and shown by an improved external sector. In the company in the current account, which is goods account, recorded a larger amount due to strong export performance, which shows a larger contribution from export of goods compared to import of goods. In account services, travel account receipt remained the largest contributor. This is driven primarily by per capita spending, larger by tourists in Malaysia. In the income account, the primary income deficit was partially offset by higher income from direct investment abroad by Malaysian companies, particularly in the finance and insurance sector and manufacturing, which is supported by the better global economy. Its secondary income contributed to a small deficit compared to the previous year because it mostly consisted of remittance by foreign workers. Next, in 2018, the current account trend showed a decrease from RM38,296 million in 2017 to RM32,295 million or 50.67%. Reason why in 2018 decrease or small surplus than previous year because the company in the current account, which is the goods account, recorded a slightly decrease compared to the previous year. Meanwhile, the services account recorded a deficit of due to the travel account recorded a smaller surplus as more Malaysians spent abroad while the number of tourist arrival to Malaysia was lower. As a result, the outflow of money abroad increased and the inflow of money into the country decreased. The secondary income account recorded a larger deficit than the previous year. This was due to the significant decline in remittance into the country. In the income account, the primary income deficit increased. It was due to a larger net payment for portfolio investment and direct investment income, as well as lower net receipt from other investment. Thus, it indirectly affected the current account, which declined slightly compared to the previous year. Nevertheless, Malaysia's current account balance still continued to be in surplus due to a larger goods account surplus and a smaller services deficit compared to the previous year. In 2019, the current account trend shows an increase from RM32,295 million in 2018 to RM50,850 million or 57.45%. This performance, because of the goods account surplus, contribute a higher value than the previous year. The goods account surplus increased due to the decline in import of goods, which was more significant than export of goods. Meanwhile, current account balance was also increased, driven by a lower deficit in primary income due to an increase in the travel account, which has a higher number of tourist arrival and per capita expenditure, especially by tourists, and lower net payment for transportation and construction services, and services account due to the higher income earned by resident investors compared to 2018. In conclusion, the trend of the current account balance in Malaysia shows in consistent from 2014 to 2019. Even though in Asia the data shows a current account surplus, but action must need to be taken by the government to improve inconsistent in the current account because it will affect the value of the balance of payment and it also give an impact on the national economy.
For 2014, the percentage of export in Malaysia increased by 6.46%. This is because growth performance was overall amid improving demand across all products. One of the major contributors to the increase in export is manufactured goods. Domestic demand for manufactured goods in the United States increases the purchasing power increase and the labor market improved, boosting Malaysia's export to the United States. For the import, the percentage of import increased slightly to 4.51%. The increase was due to strong manufacturing exports and robust in investment and consumption activities, which contributed to growth in all major components of imports. Imports of intermediate goods expanded at a stronger pace, driven by increased manufacturing activities and the relocation of multinational companies' operation in Malaysia. For 2015, the percentage of export was raised by 0.36%. This export growth is due to the demand higher on manufactured products and commodities and the positive valuation effect of the depreciation of the ringgit. Throughout the year, the higher trade surplus was largely due to commodities. This was because the lower commodity exports were offset by a larger decline in commodity-related imports as well as additional support from strong net exports of electronics and electrical products. Okay, for the imports, the percentage was raised to 1.15%. According to MITI, intermediate goods and consumer goods contributed the bulk to the increase in imports. Intermediate goods, which is accounted for 58.6% of total imports, increased by Ringgit Malaysia 2.0 billion to RM 35.4 billion. For 2016 also, the export climbed by 0.83%. The increase reflects the stronger demand momentum of the regional economy and positive price movements. There was also a positive valuation effect following the depreciation of the ringgit and the gradual increase in commodity prices towards the end of 2016. For the import, the percentage was increased to 2.24%. This performance was largely driven by higher imports of capital goods in line with the implementations of ongoing infrastructure projects and the continued expansion of investment activities. The imports of intermediate goods recorded a smaller contraction due to the lower imports of fuel-related imports following continued weak commodity prices.
I'm Fu Hao. My metric number is 286049. For 2017, export and import increased 16.67% and 17%. So according to MITI 2017, various promotions held and over 17,000 Malaysians are benefited. This program contributed to export growth driven by manufactured goods, which recorded an increase of 82.1% of the total export volume. Import of intermediate goods and stronger capital, respectively of 20% and 15.3%, are in line with robust manufacturing exports and investment, which is more rapid in the manufacturing sectors and service. Imports of high-value goods, including floating structures, oil and gas vessels, as well as aircraft, provide additional impetus to import capital, especially in the quarter first of 2017. For 2018, increase of export and import were 3.59% and 4.2%. Export performance is driven by manufactured exports, 9.1% this year, and 2017 was 18.6%. With continuous export demand from partners in major trade, including PR China, the EU, and the US, as well as industrial demand for semiconductors. Import goods for re-exported contributed higher to the rate 40%. 2017 was 25.3%. due to re-export activities more active electrical and electronic products following the electrical and electronic distribution hub newly established global, as well as demand continuous regional for petroleum products, and the total imports of construction goods were at 8.3% of total imports, which increased by 2.5% as a result of higher imports of goods, which included costume, jewelry, and pharmaceutical products, as well as edible preparation. For 2019, export and import dropped 1.77% and 3.26%. Electrical and electronic products 36.5% of total exports, falling to negative 7.4%. Crude petroleum, which accounted for 2.4% of total exports, declined 40%, following a reduction in both export volume, negative 33.5%, and average unit value, negative 9.8%, and liquefied natural gas, which represented 3.6% of total exports, declined 11.2% due to a fall in average unit value, negative 13.7%. Imports of capital goods declined, negative 4.3% due to the decline in both capital goods, excluding transport equipment, negative 329.6 million ringgit Malaysia, negative 4.2%, and transport equipment industrial, negative 29.4 million ringgit Malaysia, negative 5%, while imports of these consumption goods recorded a decrease of 142.8 million ringgit Malaysia, which negative 2.2%. The decline was due to semi-durable goods, negative 75.3 million ringgit Malaysia, negative 6.1%, durable goods, negative 50.9 million ringgit Malaysia, negative 6.3%, and food beverage, mainly specifically for household consumption, negative 41.1 million ringgit Malaysia, which negative 4.8%.
In conclusion, deriving from the first objective, the overall current account flow experienced fluctuation, yet it remained positively in value from the year 2014 to 2019. To overcome such situation, the government could actually cut down on tax and interest rate. This could give relief to the homeowners and also to the businesses. Following the next objective, the exports and imports balance of goods account in current account balance, Malaysia from the year 2014 to 2019 resulted in surplus. In Malaysia, the current account surplus has been driven mainly by the surplus in the goods account, while the other components have remained deficit.